As Tom mentioned, it's been a tough week for the media, although many of the problems are far more entrenched than just a cyclical downturn. The internet is not only stealing advertising revenues, it's offering for free a lot of the content that traditional media sells without the same entrenched costs. I spoke to Fairfax Media Chief Greg Hywood about his plans to escape what seems to be the inevitable fate of incumbent media. I should also point out that I've known and worked with Greg for more than 30 years and have an interest in an online publishing business that competes with Fairfax. Well, Greg Hywood, your share price, Fairfax's share price now went below $1 last week, mid-90s now, and it's now 33% since you took over. So, and the market's only down 8%. So, I mean, there's obviously a bit of a sense of being underwhelmed in the market so far. What are you going to do to turn it around?
Well, look, we're going to run the business the way it should be run. I mean, we have a strategy for this business. What we do is we create audiences and we leverage that into advertising and digital transactions. That's the core of our business. It's the post-classified Fairfax, and we're doing that. Now, you know, quite clearly, Alan, the media market is a pretty tough market at the moment. We've got consumer sentiment down. We've got savings rates up. It's a difficult advertising environment, and so quite clearly the entire media market is down, and Fairfax is part of that market.
So it's an interesting phrase, the post-classified Fairfax. Tell us a bit about what that is. I mean, well, firstly, I guess, is it really post-classified? Is that over now?
Yeah, it's over. I mean, fundamentally, those little print classified advertising which made up the Sydney Morning Herald, The Age for 100+ years, that business has gone online, and Fairfax has captured a portion of that, not all of that. What we do with our business now across print and online and tablets is that we use our content, our journalism, to create audiences. Now, if you look at the old business didn't really need the journalism. It created a market around jobs, homes, cars in print, and the company drew further audience into that through the journalism, but it wasn't completely dependent upon it. Now our business is about the journalism and the content, and the new model is about creating those audiences and creating advertising, not just in print, but across audiences.
Do you have to get those people to pay for the content as well? Is that a necessary part of the strategy?
Well, Jack Matthews, who's our new CEO of Metro Media, uses the word nuanced. We will have some upfront payment, quite clearly for the print product. We've said that our new app will be a paid product. We will have payment with perhaps behind some paywalls for very special material, but we want to make sure that people have access to our brands, because if your business is creating audiences, you don't reduce your audiences by taking too much money up front.
And to what extent do you have a conflict between the need to develop quality journalism and also the need to cut costs? I'm talking about the proposal, the move to make sub-editors redundant and outsource the sub-editing to page masters, which has got everyone steamed up.
Well, look, I mean, what this is really about is a reallocation of resources. I mean, our view of the business is that we need to produce our products as efficiently as possible, but the competitive advantage that we have is in the quality of the journalism and the quality of the content. So what we did in terms of reframing the way our sub-editors and our editorial production work operates is that we saved money there so that we could reinvest in the reporting and writing and design of the papers.
There's also been talk lately of that Fairfax is going to sell Trade Me, the New Zealand version of eBay. Are you going to sell it?
We've just said publicly, Alan, that we're reviewing our assets. We're going through a review process around that. Quite clearly, Trade Me is a key asset. We will look at that. Quite clearly, Trade Me is an important source of digital earnings, but there are also other sources of digital earnings that we can invest in. So it's not in any sense an abrogation of the strategy. It is just looking at the nature of our assets, where they are in the business cycle, and how we can extract the maximum value for shareholders.
So to clarify, you're definitely going to sell radio stations. They're on the market, right?
Well, we haven't said we'll definitely sell the radio stations. There's been a lot of interest in the radio stations, and we are testing the market on that. We're testing the market to see that if someone comes up with a price for either all of the radio stations or a portion of the radio stations which is attractive to us.
Right. And what about the Age? We've got Ron Walker, former chairman, has confirmed that he's interested in buying it. Would you sell it?
Well, look, the Age and the Sydney Morning Herald are intertwined. Now, we have just restructured this company. We've brought the big mastheads together in terms of print and digital and geographically between Melbourne and Sydney, sitting under the new Metro Media division. We are creating a national structure for sales, a national structure for a portion of the commissioning of editorial content. So, you know, we see the creation of effectively a national market between Sydney and Melbourne for these products. And they're not just newspapers, Alan, of course. I mean, they're mastheads. And these mastheads encompass a newspaper, an online site, and a very successful iPad launch. Now, we've got in excess of 100,000 downloads of that iPad, and it's, as I say, it's an integrated model that we've created, and one that we think will most effectively get revenue out of the advertising market.
Right, so the Age is not for sale.
Look, we have an integrated model that we've built, and we think that's the way forward.
In fact, is it so integrated that one way to look at it might be that it's one business with two brands facing the two audiences in Melbourne and Sydney?
Look, it's incredibly important for Melbourne and Sydney to have prestigious mastheads that represent those local communities, those city communities. They're both great cities, and they need great mastheads, they need great newspapers, they need great websites. What we have to do is we have to deliver into those markets the quality of journalism that they expect.
And as the Age and the Sydney Morning Herald head towards a sort of a nuanced, as you put it, paywall, does the Financial Review start to come out from behind it?
Oh, we're reviewing the Financial Review, yes. I mean, there's issues in the Financial Review. The Financial Review's got a paper and quite a high paywall, and we believe that there's an opportunity to broaden the access into the AFR material for a broader audience. So we're having a look at that.
Thanks for joining us, Greg Hywood.
Thanks a lot, Alan.